Hello everyone and welcome to this presentation of the right way to trade tops and bottoms. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. And first and foremost, for those of you who are unfamiliar with our website, we are an educational company. It's our goal to teach you all of the insights, wisdom, and trading strategies, as you see here, that I've acquired in my 38-year career and then pass them on to my students and members. For example, today I'm going to be giving you a great entry technique which was introduced to me some 30 years ago on the floor of the exchange, and it's for specifically designed, and it's a different way of trading tops and bottoms. Now, I've been trading for 38 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. A lot of people aren't familiar with what a specialist is. If you ever look at those old pictures on the floor, the people trading and yelling and screaming with paper all over the floor and making all these weird hand signals, those were floor traders, and the specialists were the gentlemen behind those large wooden podiums, and they made markets basically in roughly about 50 stocks. So if you wanted to purchase or sell a particular issue, you had to go to the trader who specialized in that particular stock. So that's where we get the name specialist trading. I traded through the crash of 1987 and the bull market that followed. I've seen and experienced just about every market environment, every trading methodology, every system, every strategy. So I know what works in terms of consistency, and I know what doesn't work in terms of consistency. I left the floor in the mid-90s to manage money and pursue my own trading. And 7 years ago, I teamed up with Pro Trader Strategies, where we basically teach students and members all of my courses and techniques and things I've accumulated in my 38-year career, hopefully to elevate their trading. So as you see, we are an educational company. Even though we provide our students and members with strategies and signals for those strategies, it's more about teaching you how to spot these signals so that you can ultimately make your own decisions and empower your own trading. Now today, I'm giving you for free a great entry technique. This is not a full-fledged strategy, but it's an entry technique that you can actually create a strategy based off of, or you can add it to your current trading plan. And I'm really confident that it'll elevate your trading. But we are required to show you this before we present the course, so please take a moment to view our disclaimer. I am going to show you a lot of performance results using this particular technique today, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. As I stated, we're required to show you this, and as you're taking a moment to view the disclaimer, I would also like to invite each and every one of you, if you haven't started to follow us already, to follow us on Twitter. There is our handle right there. You may want to copy that down. It's at SPCLSTTRADG. I'll leave that up there just for a few moments so you can copy it down. I post information on a daily basis, anywhere from daily financial wisdom to actual signals that are strategies just generated. So point in fact, I believe it was 2 days ago, I posted a buy signal in the E-mini futures. Multiple strategies were generating buy signals. So I posted that the next day on Twitter, and most of our students either exited or possibly are still long, but they've reached the exit point where you gain roughly about 20 E-mini points or $1,000 in just one day. That was an actual signal that we posted just a few days ago. So feel free to follow us on Twitter. And if you'd like more information about what we do or some more detailed information, you can go to our Facebook page. My sister site, Pro Trader Strategies, has put together a Facebook page for us, and there's a lot more detailed information, videos, and things in which to learn about what we do. Okay, with that out of the way, as I stated, we are first and foremost an educational company, and the reason I say this is because it's my philosophy that the reason why most traders fail is because they're basing their trades off of faulty information or relying on an outside source to tell them what to do. Now, this source can either be some convoluted indicator, it can be some guy in a chat room, or it can be some, overly complicated system. But the real thing is you're just relying on that to give you all your answers of what to trade, when to trade, how much to trade, what market, what time frame, and you've basically taken yourself out of the game. You're not a part of the process anymore. My goal is to put you back in the game, to give you the information, tools, and tips you need and the education so that you can ultimately make your own trading decisions. That's what it's really all about. It's not about listening to some guy on a webinar tell you what to buy and what to sell. It's more about getting information, learning from that educator, and then going on your own and making your own trading decisions. In my 38 years, this is the only method that will get a trader consistent. Not relying on some guru, but really learning sound fundamental education and then relying on your own instinct, your own insight to trade. So this is my goal. The reason why is because I struggled my first 2 years of trading. It was tremendously difficult. I couldn't make a dime when I first started trading. And my mentors, who were specialists themselves on the floor, they taught me all the same tips and techniques, and that's what's been able to sustain me for 38 years. So this is what I teach all of my students as well. My goal is to teach you, not to trade for you, as you see here, but to teach you how to trade with the same specialist edge that was able to turn my trading around. Now today, I'm going to be giving you a great edge. Once again, it's not a full-fledged strategy, but it's a great entry technique that you can virtually apply to any strategy, or if you want, if you're a more advanced trader, you can actually build a strategy based off of this entry technique. And I'm going to show you and start off the presentation by how most people trade tops and bottoms. But before we go any further, if you have any questions, I know some educators like to take questions during the presentation. I would like you to please wait till the end. The presentation seems to flow a lot smoother if we wait till the end. So if you happen to have any questions, kindly wait till the end and I'll open up the question and answer box then, but I won't even open it up for questions then. This isn't going to last that long, probably about another half hour or so, and then we'll go into questions. So it won't be a very long show, and I will answer this one question, which is the most popular, and that is this being recorded? Yes, it is. All of our presentations are recorded, so you can contact Pro Trader Strategies and they will send you a link to this if you have to leave early or if you're having technical difficulties, okay? So once again, just hold off any questions for the next 20-30 minutes. All right, so let's start out by how most people trade tops and bottoms, myself included. This is the way I used to trade, almost exactly the way I used to trade when I first started some 38 years ago. I'm going to start off with stocks for all you stock traders, and I'm going to show you some older charts just for educational purposes. But then towards the end of the presentation, I'll show you charts as recent as yesterday, okay? All right, so let's start out with this older chart here in Cat Tractor. As we see, when you want to trade tops and bottoms, you usually need some type of overbought, oversold tool, something to tell you that the markets are too high or too low. So if you look at the very bottom of this chart, I've just simply plotted a slow stochastic. I don't know what the parameters are. I didn't even open up the edit box. All I did was simply click on slow stochastic. The only thing I do know is that the upper threshold, I believe, is at 80, set at 80. That's this blue line. And anytime the indicator crosses above and then crosses over, that's telling you that we are in the so-called overbought territory. This is where you want to sell. And anytime the indicator goes below that threshold on the bottom, which I believe is at 20, well, this is conventional wisdom tells us when we are in the so-called oversold conditions, and this is when you want to buy. So if we just simply apply this to this older chart of Cat Tractor, we see here that when we crossed in the so-called oversold conditions, this generated a buy signal right here. So you would have simply just bought at the market on this next bar, and it would have turned out to be a pretty nice trade. You had about a nice 7-8 point profit. Now, if you're an aggressive trader, you would simply sell when price gets into the oversold area, and then you'd go short. So now you'd be short, and guess what? It's looking pretty good. Now it's going down, and so you not only bought at the bottom, you sold at the top. And so you simply wait for this indicator, this overbought, oversold tool, to go into the so-called oversold territory once again, and that's where you buy. Now, I don't want you to get hung up and think that this is based off of the slow stochastic. You can virtually use this type of technique on any indicator that tells you you are overbought or oversold. So it can be any other type of oscillator. It can be something that you've devised. It can even be someone on TV telling you that the markets are overbought or oversold. All we want to do is find out when conventional wisdom tells us something is too high and something is too low. So as we see here, we are now back at the oversold area. So you step in and buy, and at this point, you're just loving trading because everything is going perfectly. You've had about 2 or 3 good trades under your belt, so you buy, and this time it doesn't work. Okay, this time it doesn't go up. So that's okay. You have some profits that you've made on the last couple of trades, so you decide to buy some more, what we call averaging down or doubling up. All right, and after all, you don't need it to go that much higher in order to make a profit. So now you're holding twice as much as your position, and it goes up a little, but in all actuality, now it's even lower. So now you're doing what we call tripling up, and so you buy again, and then ultimately it goes lower and lower until eventually you've given back everything you made on the first 2 trades, okay? Does this look familiar to anybody? All right, it looks familiar to me because this is exactly the way I used to trade on the floor. Now, this phenomenon just doesn't happen with stocks. Let's look at the E-mini S&P. Let's look at an older chart here of the E-mini. This is an intraday chart, a 5-minute chart. All right, we've plotted the same slow stochastic, telling us when something is too high and something is too low. And we just want to use the same conventional wisdom. When we're overbought, well, that's when we want to sell. So you sell at the top here, and guess what? Works like magic. You've got about a good 7 or 8 points you made here in the next hour. And now when the indicator goes to oversold, all you have to do is cover your short and buy. So now it goes straight up. The minute you buy it, it keeps going higher. At this point, you think you'll probably reach higher in the next 6 months because it's just too easy. And you see that the indicator once again goes up to overbought territory. So you decide to sell your long, and now you're going short. This is just too easy. You've got 2 or 3 good trades under your belt once again. So you're short the E-mini now on a 5-minute time frame. And guess what? It doesn't go lower this time. In fact, it's not really going higher, but just, kind of slowly inching upward. So you're not frightened. You decide to sell some more. You're averaging down, and it goes higher. But for all intents and purposes, it's still overbought, right? I mean, look at the indicator here. We're still in the overbought scenario, so you want to sell some more and triple up until ultimately you've given everything back once again. This is the exact same scenario. Before we looked at a daily bar chart of Caterpillar Tractor, and now we're looking at 5-minute charts of the E-mini with the same indicator, and we're going through the same faulty process. Or how about currency pairs? We can apply this to Forex. In fact, I think you'll see this even more in the Forex markets because of their trending ability. Excuse me, we have an older chart of the Swiss franc. Same slow stochastic plotted. We didn't change anything, but it really doesn't matter what indicator we're using. Excuse me. So all we want to do now is short. Why? Because the indicator is telling us we're too high, right? We've never been this high before. You've got to sell. So you sell, and the indicator goes a little lower, but the currency pair doesn't. And you decide to sell some more, and some more, until ultimately you don't even have any winners to show for this particular trade. Where before in the E-mini and the stock Caterpillar Tractor trade, at least you had a couple of winners under your belt. In this particular scenario, you never even made anything because the currency pair never even went down. So you've basically blown out your account. Now, I hope no one has gone through this, but does this process look familiar? Because this is the way most people trade, myself included. This is the way I used to trade. But it wasn't until my mentors taught me, they said, Steve, trading this way is similar to going to Las Vegas and playing the slot machines. Because every once in a while, playing the slot machines, you will get a winner, and it'll give you this false sense of security thinking that you're doing well. But over time, you'll look down and you'll see you have not made any money. It's the same way with trading tops and bottoms with conventional wisdom by using overbought, oversold tools. Every once in a while, you'll get a nice little winner. You'll think you're doing all right. But over time, if you continue to use this, you'll ultimately give everything back, or you won't have anything to show for it. Trust me, take it from someone who traded this way for 2 years and almost had to leave the trading floor entirely because I didn't have anything to show for it. Now, my mentors were lucky enough to see how much I was struggling. They saw how much I was struggling. I was reading all the books. I was going to all the seminars and subscribing to all the newsletters, but nothing was seeming to work. I'd have 1 or 2 great trades, but then the next trade I'd give everything back. And here's what they said to me. They said, Steve, you must grasp this concept if you want to trade tops and bottoms. And that is, there's absolutely no such thing as overbought or oversold. And it was very difficult for me to really grasp that, but really there is no such thing as overbought or oversold. And that's the first step you have to take to get onto the road to consistency. We've been taught that when something is too high, you have to sell it. It's just too high. It's never been this high before. All the institutions are panned out. They haven't, been buyers anymore, so you can't buy it. It's too high. It's going up on nothing. And the same thing works in the reverse. It's too low. It's oversold. We've never been at these low levels before. All the indicators, everything is oversold. But if you look back, you see that that's not true. We've all seen markets, any market, go up as high as it wants to. It will be overbought for weeks, even years. And we've seen the same with markets being oversold. They'll go down until they, are oversold for years. And we've even seen equities just totally disintegrate because they've gone under by being oversold for so long. So it's really folly to try and think that you can have over time winning trades. Now, don't get me wrong, there are some traders who are able to do this. I know of a few who have an uncanny sense of picking tops and bottoms. The only trouble is they can't teach it to the rest of us. You know, they're seeing something that the majority of us do not see. So it's very difficult for us to know when these overbought, oversold situations occur. So it's much better to trade the method that my mentors taught me. And what is that? What is the right way to trade tops and bottoms? Well, what they explained to me is that the right way is simply to go with them. So this is the technique I'm going to share with you today. The right way to trade bottoms, tops and bottoms, is to simply go with them. So what does that entail? Well, here's the method. Once again, this is going to be recorded, so don't worry if you don't get all of this right away. You can write it down and ask me questions in the next 15 minutes. But it is fairly simple. But please, I just want to remind you that this is not a full-fledged strategy. I know a lot of you are starting to think, well, okay, great, I'm going to learn how to trade a strategy. No, this is just an entry technique, a very powerful one, though. So you can build a strategy based off of this, or you can add this to any strategy you currently have. And I really feel confidently that it will increase your odds for success. All right, here's the technique. Let's go back and look at those same three charts we looked at earlier. Here's the first one, Caterpillar Tractor, okay? All right, now what my mentors taught me is they said, Steve, it doesn't matter what market you're trading, and it doesn't matter what time frame you're trading. But before you do anything, you must plot a 50-period simple moving average. And then you ask yourself, and you may want to write this down, where is price in relation to that 50-period moving average? Okay, I'll say that once again. I would, personally, if it were 38 years ago, I would have written this down and posted it onto my computer screen. But that is, ask yourself, where is price in relation to the 50-period moving average? And you'll only come up with two possible scenarios. If price is above, well, then you're only going to be looking for buy setups. All right, doesn't matter what strategy you're trading, what technique, but you're only going to be looking for buy setups. If price is below, as it is here, well, then we're only looking for sell setups. We are in no way going to be buying anything if it's below the 50-period moving average. So right off the bat, this, in my opinion, eliminates half of your losers because you're in sync with the overall trend. Okay, so now we go to the tops and bottoms portion of this. We're still going to use a indicator. It doesn't matter. It doesn't have to be the slow stochastic. It can be any overbought, oversold tool. It can be something you've devised. It can even be based off the tides of the ocean. It really doesn't matter as long as it's telling you that something is overbought, oversold, because we're going to exploit it. So since we're going to be going short in this scenario, we want to identify on this particular chart all of the so-called oversold areas circled in red here. That's what we want to look for. All right, we want to locate where this indicator or tool told us that it was oversold, it was far too low. And then once we've done that, we go to the chart and we want to identify all of the short-term bottoms that were created in that so-called oversold area. As you see here, we're oversold where this red circle is, and we just go straight up, and here was a bottom that was generated. All right, and then we're oversold here, and here's another bottom, and it bounces just for a few bars before it goes lower. Now here's a short-term bottom. Someone would say, well, Steve, why didn't we identify this one as a short-term bottom? Well, we look down the indicator, we weren't oversold. We have to only identify the ones that are oversold territory. Why, you ask? Because we're going to exploit those so-called oversold areas, because now we know there's no such thing as oversold. And so we're going to exploit if they trade one or two ticks below those levels, and that's our entry point. So you see how easy it is. Now all we're doing is selling because we're below the 50, and we're exploiting the so-called oversold. We're going with the sell-off. All right? Now, before we had a couple of good winners, and then we gave everything back. Now we have nothing but winners. This is just an entry technique. I know right now you're saying, boy, this is great, but where do I place my stop? Where do I get out? Don't worry, that'll probably be in the next webinar. We're just focusing on where you would enter at this point. All right, let's look at the E-mini chart. We had a couple of good winners, and then we gave everything back. What's the first thing we do? We apply the 50-period moving average, and we ask ourselves, where is price in relation to the 50-period? Price is above. So if price is above, we know that we're only going to be looking for buy or long setups. Remember, this does not mean if price is above, you just buy at the market. That's not what this means. You have to have some structure. Now, I'm giving you structure today in the form of an entry pattern, but it could be structure in the form of a strategy you're already trading. So it doesn't really matter what you're trading. But as long as you're only going long, we will not sell anything if it's above the 50-period moving average. You already eliminated half of your losses. All right? So if we're only going long, well, what does this mean now? If we look at the indicator below, it means we're only going to be focusing on so-called overbought territory. Why? Because now that we've grasped the concept that there's no such thing as overbought, we're going to exploit it. So if these green circles represent where so-called conventional wisdom tells us the market is overbought, we simply identify all the tops that were created, as we see here with these short green horizontal lines. And what happens is, if we trade 1 or 2 ticks above those short-term tops that were created in the so-called overbought scenario, well, that's our buy setup. And now, once again, we have nothing but winners. Where before we had a couple of nice winners and then we gave everything back, now we have nothing but winners. Why? Because we're in sync with the overall trend and we're exploiting overbought conditions because we know now that there is no such thing as anything ever being overbought. Lastly, let's look at the Swiss franc. Okay, we remember now that we had nothing but losers. We had about 4 or 5 losers in this because it never went down. It just kept going higher and higher, and you kept thinking, boy, it's got to go lower. I mean, look how long you've been overbought. Practically the whole chart for about 3 or 4 months, right? But as we now know, things will stay overbought as long as they want to. Weeks, months, years. So it's really silly to try and think you can predict when it's going to end. Much better to go with it. So how do we know what side to be on? We add the 50-period moving average. We ask ourselves, where is price in relation to that? Obviously, this entire time price has been above. So should we have ever been shorting the Swiss franc? No. Do you see right off the bat how silly it is, how we have so many silly losses because we're not applying the simple rule of getting this on the right side of the market. If price is above the 50-period, we are in no way going to ever short anything. Sure, you may have some nice shorts every once in a while, just like, playing the slot machines. You may have some nice, bells and whistles go off and have a nice little jackpot every once in a while. But over time, you most likely will have nothing to show for it. Remember, success is all about longevity. It's not about hitting a home run. I knew tons of traders on the trading floor, about 200 guys in the same room. I knew a lot of traders that became millionaires overnight. And guess what? They gave it all back. So what does it matter if you can, hit the jackpot every once in a while, but if you're going to give it back trading the same method? What really matters is a technique that can sustain you 20, 30, 40 years down the road. And this is what we teach at Specialist Trading. All right, so since we're above the 50-period moving average, what are we going to do? We're going to exploit so-called overbought conditions. Why? Because there's no such thing as overbought. Once we locate where the overbought conditions are, we simply identify all the tops that were created, as we see here with the green horizontal lines. And once we trade 1 or 2 pips above, that's our entry point. Whereas before we had nothing but losers, now guess what? Applying these simple rules now, we have nothing but winners. Okay, that's the basic concept. You should have a general idea of how this works. Okay, we are exploiting overbought, oversold because we don't believe it. We don't believe in it. We know it doesn't exist. So therefore, let's look at some more examples to give you a better understanding so we can see how this happened as recent as yesterday. Let's look at some stocks, first of all, for all the stock traders, and we'll start off with RAI. Obviously, someone looking at this would say, well, Steve, yeah, this is easy to see. This is a current chart, I believe, from yesterday, coming up into the end of yesterday. Easy to see we've been in an uptrend looking back. Well, sure, that's right. But had we looked back at the end of July or August into September, we would have known from the beginning that price was above the 50-period moving average. All right? So we've known all along that we should only be buyers prior to this nice move up. So if we're going to be buyers, obviously we're exploiting the so-called overbought conditions. And then we just simply identify tops, and those are our entry points. Now, if we take in the very first trade, which we suggest to all of our new members, because that one gives you the most bang for your buck. Roughly, if you had gotten in the beginning of September all the way to just yesterday, you would have had 7-point gain on this roughly this $42 stock. Okay. Let's look at Yahoo. This is coming in all the way, once again, from June all the way into the beginning of October this month. Obviously, we're only going to be selling. Why? Because where is price in relation to the 50-period moving average? Price is below. So we're not going to be buying anything. You would have lost a lot of money trying to pick a bottom in Yahoo. Much easier to just apply the 50-period moving average and see that we're going short. We're looking to go short. And once again, it doesn't have to be this technique. It could be a strategy that you currently trade. It could be anything that you feel confident in trading. Just as long as you're on the right side, you'll give yourself that much more chance for consistency. So if we're going short, we're going to simply exploit the so-called oversold areas, and then we identify the bottoms that were created, and we just simply sell. That easy. Now if we had sold and taken the very first sell signal, well, we would have racked up about 12 points since the beginning of July roughly. Okay. Let's look at NOC. This is another current chart coming into today, I believe. Today or yesterday. Now this is, I show you this one just because it's a little bit more advanced. We are below the 50 period, then we oscillate above, then below, then above. So this is where students who try to apply this technique get confused. They say, well, Steve, which side do I know to be on? We're up above, we're below, we're up above. When it gets like that, simply go to whatever tool you're looking for to be overbought, oversold. Because remember, they have to be in sync. All right? You're not going to want to be looking at an overbought conditions if price is below. We're only going to be looking at overbought if price is above. So we have a couple of scenarios of overbought, oversold, and then overbought again. So we simply identify them on the oscillator, whatever we're using. And let's take this oversold condition right here, which is the beginning of October. All right, that would create a bottom right here. In order for us to apply this, we would have had to gone 1 or 2 ticks below. But as you can see, we never did. So we never shorted anything. We were still below the 50, and we were in the so-called oversold area. We created a short-term bottom. But the point is, we still have to trade 1 or 2 ticks below in order to enter the trade. And we never did. We went right back up. So there was no trade. But if we look at the overbought conditions, well, we're overbought here, and we're overbought here. And as you can see, we have the tops created. So once we went above, all you had to do was buy. And if you had taken the very first scenario, an NOC, well, that's 20 points to the upside. And look what happened here. I believe this was yesterday. Now, did we know some news announcement was going to come out and the stock was going to gap up a good 10 or 20 points? No. The only thing we knew was that in advance, the market, not some trading guru, but the market was above the 50-period moving average. So that's all we needed to know. This is how powerful this tool is. It usually gets you on the right side. You'll have a higher level of consistency if you trade in sync with the 50-period moving average. Okay? How about when? Now this is coming in from August all the way into this month, October. We are oscillating above, once again, above and below the 50-period moving average. When we are above the 50-period moving average, we want to see if there's any overbought conditions. And no, there have never been any overbought conditions at all. So we're not even going to be interested when price was here above the 50. So we're only looking at sell scenarios. And here are the exploited so-called oversold conditions. We identify the bottoms. And if we had taken this first sell signal right here, well, in roughly about 3 months, that's 45 points to the downside. See how simple this is? We're not looking at news. We're not looking at volume. We're not concerned with what's going on globally. We don't care what someone's saying in a chat room. We're only listening to the most important thing, and that's the market in front of us. Remember, I used to trade probably like 99.9% of all traders. I listened to a ton of news. I knew all the earnings estimates of the stocks I was following and making markets in. I subscribed to every newsletter. We didn't have trading rooms or chat rooms back then, but we had newsletters. I subscribed to each and every one. I had tons of indicators on my screen, probably about 20 or 30. And I was just a mess. My trading was so overcomplicated. It was a wonder I ever even initiated a trade because I had to wait for all these things to align. It was just ridiculous. And once again, I was doing everything I was taught to do, but nothing was generating gains. It wasn't until I had the courage to let go of all these things and strip away all this, what my mentors called useless noise, that's when I finally started to become consistent. You can even apply this to commodities. Here's crude oil, all right? A lot of people saw that crude oil was going lower in the summer months, and we look here at a weekly chart. We see here, starting in August, September, October of last year, that we started to go below the 50-period moving average. So we knew well in advance that crude oil on a weekly time frame has been very negative. On a weekly time chart, if we are below the 50, well, we just simply want to exploit the so-called oversold conditions. Look how long crude oil was oversold. From August of 2014 all the way to April of 2015, all right? That's about 8-9 months. If you tried to pick a bottom, then do you think you would have had, any profitable trades? I don't think so. But tons of traders were trying to pick a bottom. They were using Fibonacci retracements. They were using, support and resistance levels. They were using institutional volume, and it continued to go lower and lower. Much easier if you just simply exploit the so-called short-term bottoms and went short. 45 points on a weekly time frame if you had gotten short just about a year ago. That was crude oil. Here's a very current chart of sugar. Now, I don't trade sugar. I'm not a commodity trader, but I'm just showing you how this technique will transfer over on any market, any time frame. The majority of price is above the 50-period moving average, so that means we're looking for buy setups. We exploit overbought conditions, We identify the tops just like we did with stocks and futures and currency pairs, and then we simply go long. Okay, that easy. Now this is up until this chart, I believe I took today up into sugar, or yesterday, and you would have had these nice profits for the entire month of October. Let's look at the E-mini S&P. Now, everyone was talking about what happened in August. Now, we've recouped all of those losses, but when August hit of this year in the summer, a lot of people were left holding the bag. A lot of people were just surprised at the huge drop down we had in the market, especially intraday traders. I had a lot of phone calls from people that were prospective clients and members of mine saying, Steve, I understand what you say about not listening to the market and not letting these outside influences, direct you, but there's no way you could have made money during that time because, all these high-speed computerized programs, these hedge funds and, fast markets, there's no way we could have gotten involved and made any money because they virtually dominate the market and control the market. There's no way the small guys like us can make money. And I said, well, I hate to disagree with you, but I showed him this chart. This was an hourly chart of the E-mini, August 18th going into the 24th. Okay? Now, August 18th, where was price on an hourly time frame in regards to the 50-period moving average? Price was above. But beginning on August 19th, well before the sell-off occurred, we had consistent closes below the 50-period, telling us on an hourly time frame, we're not even going to buy anything. We're going to be only looking to go short. So there's no way we're going to get caught being long. All right? Now, if you were using this simple technique, you would have seen that we were never in the overbought territory. We were always in oversold. And since we know there's no such thing as oversold, let's exploit it. So we located the oversold areas, and then all you have to do is identify where the short-term bottoms were. Now, do you think you could have made money easy enough going short the E-mini using the simple technique I taught you today? That was 230 points in basically 2 days. We're not saying all of our students and members held on this long. I'm sure I wouldn't have held on that entire time. But still, do you think at least you would have been on the right side and that would have been, this victim attitude saying, oh, there's no way the little guy can make money in the markets. Don't concern yourself with what outside sources are doing. That's not your responsibility. Your only responsibility is twofold: to understand what the market wants to do and then simply to jump on board. That's it. That's your only job as a trader, to listen to the market and see what direction it wants to go and then just to jump on board. And that's what we provide you. We provide you with structure so that you'll be able to do that. It's much simpler and a lot easier and a lot more consistent. Now, if we go to a daily chart, well, let's look here and see what's happened recently in October. We were initially in September, coming into October, below the 50-period moving average, but in the first week of October, we crossed above it, all right? All right, so that means we're only looking to be buyers. A lot of people have been saying, boy, this rally in the market has really surprised me. Well, we knew back as far as the first week in October that we should only be looking for long setups. Why? Because the market told you it's above its 50. That's one of the most consistent tools I think you could use. So we knew in the first week that we're only looking to go long the E-mini. All right, so if you wanted to use this technique on a daily time frame, here's the so-called overbought conditions. In fact, for the entire month of October, we've just about been overbought, and yet we continue to go higher and higher. All right, you see how there is no such thing as overbought? And since we're exploiting it, we just identified the tops, and here are the three basic tops you could have got long. If you had taken this very first signal right here, which I believe was October 15th, well, that's 70 points up until I believe I took this snapshot yesterday. If you had held out for the last 2 weeks, that's $3,500 per contract, just trading one contract at a time. Now let me show you what happened yesterday. At the end of yesterday, the market was kind of going back and forth with some news going on about interest rates. Remember, I stopped following news over 30 years ago. Even when I was on the floor, I didn't look at news. All I do is listen to the market. So some news came out about interest rates or whatever, and then the market started to bounce back and forth, and then it really took off at the end of the day. Well, here's a 1-minute chart of yesterday's action in the last hour of the trading day. And as you can see here, coming into the last hour or so, 11 o'clock, 11:50, we were below the 50 period, and then we had consistent closes above. So even on a 1-minute chart, we knew that we were going to be only looking to go long. We weren't going to try and short the market until it crossed back below. All right. Now, if we look at the same tool here, once again, we had an oversold condition here, and we could have exploited this short-term bottom if we had ever rolled over and turned back lower, but we never did. So since we never did, we focused our attention now on the overbought scenario. And those are the tops we wanted to exploit. And look at all the chances you could have had in the last hour to go long. Now, we're not saying you would have purchased each and every one of these. I know some students of ours who trade this technique, buy 1 or 2 or 3 times, usually not as many as this. But these are all the opportunities you had to get long in the last hour. And if you've just taken this very first signal, which often gives you the best bang for your buck, well, that's 18.5 points in 1 hour, over $900 per contract. Okay? Think you would have had a nice last hour trading this simple technique I shared with you? That was yesterday. And then lastly, let me show you this before we go into question and answer on the Forex portion. Here's a daily chart of the Canadian dollar coming into October. We are above the 50 period. So what does this tell us? It means we're only going to be long the Canadian dollar. Therefore, we exploit the overbought conditions. We identify the tops. And look at all the buy setups you could have had. This was as far back as July going long the Canadian dollar. Not worrying about global conditions or the economic conditions around the world. We're simply looking at the chart. That's 700 pips, or roughly $7,000, just taking that very first signal into October. Now, if you wanted to be a more long-term investor, well, let's look at a weekly chart of the Australian dollar. A lot of people have just been pondering over the past year or so how negative the Australian dollar has been. And they can't understand why it hasn't bounced or gone higher. It's easy. It's below its 50-period moving average. As long as it's below, why would you even want to consider going long the Australian dollar? We're not even going to tell any of our members to look for buy setups until we go above the 50-period moving average. It's that simple. We don't care about economic news. We don't care about tons of indicators. Just look at the 50-period. All right? So since we're below, look back all the way back here on this weekly chart to October of 2014. And look how long we've been oversold. You see how silly it is to try and pick a bottom depending on overbought, oversold conditions? It just won't last. So much better to simply locate and then identify the bottoms and then simply exploit them when you trade 1 or 2 pips below. That's your entry point. Had you done that in the very first trade last year, you would have generated a profit of roughly about 1,700 pips or $17,000 per contract. That's how simple it is. Now, 2 points to remember, extremely important before we go into question and answer, and that is, first of all, there is no such thing as overbought or oversold. I can't stress enough how my trading started to become consistent until I really grasped this concept. Because I was just like everyone else. I firmly believe that prices, when they got too high, they always came lower, and prices, when they got too low, they always went higher and bounced higher. But we don't know when that's going to happen. Things can be overbought as long as they want. They can be oversold as long as they want. So it is really silly, really terrible odds to try and think you know when it's going to happen. There are some people that can do that, probably 1% of the population. The rest of us have a very difficult time doing it. So why not just simply go with it? The odds are in our favor that it's going to continue in that direction. Just simply go with it. So if there's no such thing as overbought or oversold, then you should never, ever try to pick tops and bottoms the conventional way. Please, it's a recipe for disaster. Take it from someone who used this for a couple of years on the floor roughly 38 years ago and couldn't make a dime. There really is no consistency. Sure, sometimes I'd have 3 or 4 great trades in a row, but it was always the next one I'd give everything back. And that's not what trading should be about. Trading should be 2 steps forward, 1 step back. Your P&L shouldn't look like a roller coaster that goes straight up and then all the way back straight down. So, in conclusion here, I want to ask you a question and ask yourself honestly, please, do you think any of these edges could have helped your trading this past year? We all know that we make promises to ourselves at the beginning of the year where we want our trading to be at the end. Okay, everyone says, well, by the end of the year, I hope to have extra money, extra income to pay for that car I want to get, or to go on that dream vacation, or to have an extra added income. All right, and I would say the majority of traders never meet those goals. They never do. And ask yourself, are you anywhere near where you want it to be? I think that if you had just applied, if you look back at your last 10 or 20 trades, if you had just applied that simple 50-period moving average technique, you would have increased your odds for success greatly this past year. I mean, look at this chart here of TE. Someone looking at this would say, well, Steve, there's absolutely no trend at all. We're just in a range. We're going sideways. And on first sight, that appears to be the case. But if you apply the 50-period moving average, you ask yourself, where is price in relation to that? The price is above. So this means you should be adamantly searching for buy setups, regardless of who it comes from. It could be one of my strategies, one of yours, from some another educator. It doesn't really matter, because if you're on the right side, the odds are going to be in your favor, that you're in sync with the market. Now, obviously, no one told anyone that TE was going much higher, but it was above the 50. That's all you need to know. Now, there's another scenario. A lot of traders would tell me, like, Steve, I was in a Pollo Loco, and guess what? Some guy in a chat room I'm in said we were at major support here. This is some Fibonacci support, or this is some support level where the institutions are buying. So I stepped in and bought, and then look what happened. Okay? I said, well, did you use the simple rule I teach everyone, the 50-period moving average? And they said, no, what is that? I said, add the 50-period moving average and ask yourself, where is price in relation? If price is above, then you should be a buyer or look for buy setups. If price is below, you shouldn't be touching it. You should only be looking to go short. You think it would have helped the traders in El Pollo Loco? Okay. Now, in closing, I want to offer you all a great 3-hour session here. This is our Secrets of a Stock Exchange Specialist video seminar. This is an actual seminar that I spoke at 3 years ago in Denver, Colorado, in front of a couple hundred people, where they paid good money to see me speak. I spoke for 3 hours. And I gave a lot more techniques, just the way I gave you today. I gave about 3 or 4 more different techniques about trading. Plus, I gave a full-fledged strategy. This is strategy number 1. This is a great pullback strategy. In fact, let me show you some of the recent signals that were generated. Now, the last technique I just shared with you was buying on the breakouts of these tops and bottoms. Where strategy 1 is different is that it looks for bottoms in uptrends, and that's where it generates a signal, such as it did here in BBY on the 29th of September, and then look what happened. Now, we all know the news that's going on with Volkswagen. Strategy number 1 deemed that it was obviously in a downtrend, but the whole time it was generating sell signals on those little bounces. And even before the stock really fell out of bed, you had 2 great sell signals that you could have taken advantage of using the exact same rules to go short. Now, this works on currency pairs as well. You don't change the rules because you're trading in a different market. We see here that the euro dollar looked as if it was starting to roll over, but strategy number 1, all the rules were included in this, deemed that we were in an uptrend, and basically just said this is just a pullback, so a buy signal was generated, and the euro dollar took off. And then just a couple of weeks ago, on a 5-minute chart of the E-mini using the exact same strategy, strategy number 1 deemed that the E-mini on a 5-minute time frame was in a downtrend, and you see all these little fits and starts to the upside. Well, these are just kind of pullbacks in a downward trend, and so look at all the sell signals that were generated using the exact same rules. So this is a great strategy. In the 3-hour sessions, I give you all the rules to the strategy: entry, stop placement, advanced exits, advanced money management, as well as all these high probability techniques. This is 3 hours of trading techniques plus a full-fledged strategy. Plus, you have lifetime correspondence with me as your mentor. Now, my sister site, which is Pro Trader Strategies, they have this marketed on their website for close to $1,000. But today, for all the attendees, we are dropping this price to $37, but it's only going to be for a limited time. Trust me, in a couple of days, this is going back to $9.97. So if you'd like to get more information, such as I taught you today, but completely different insights and techniques on how to trade, plus a full-fledged strategy, really take advantage of this $37 offer, okay? Here's how to take advantage of it. Remember, this is a 3-hour video seminar, and it's yours to keep. It's not going to disintegrate in a couple of weeks. It's yours for life. Plus, you get my personal email address. You can correspond with me as long as you'd like. So here's how to do it. Go to our sister site, Pro Trader Strategies. That's their email address, trading@protraderstrategies.com, or you can call them directly at the number there, 310-598-6677. And there is the link to go directly to that $37 discount sign-up page. Now, that's not a live link. You have to copy and paste that. But if you look in your chat box on the GoToWebinar column on the right, you'll see in the chat box they have posted, Pro Trader Strategies has posted a live link. So all you have to do is simply click that on. It will take you right to the page to sign up. You simply pay for the $37 deal, and you'll be up and running ASAP. Okay, so I'm going to leave all this information up for you, and I want to thank you for holding off on any questions, and I'll open up the question and answer box right now and answer anything you may have. Amir is asking, how long will the session last? Well, we've been going for about 45 minutes, or just about done now, and we're only taking questions and answers, so this is about it. Remember, if you have any questions concerning anything I just went over, you can start trading this technique that I shared with you, the entry technique on exploiting tops and bottoms. But please, just as a suggestion, I would always tell you, firstly, that you should paper trade it first. There's a lot more you can learn by simply paper trading this technique rather than just jumping in, feet first. I know a lot of traders, their eyes light up when they see this. They go, wow, this is simple. And I looked at a few charts where this would have worked perfectly yesterday, so I'm going to start trading it tomorrow. And inevitably they lose money. Not because it's a faulty technique, but because they're implementing it incorrectly. So please study this first. Remember, it does not matter what indicator you use. You can use a slow stochastic, such as the one I used. You can also use any other overbought, oversold tool, something you've developed or something from another educator. It really doesn't matter, okay? Jeff says the link goes to the webinar sign-up page. If you're having trouble, Jeff is having trouble going on to that link I see there. I think, let's see, weekly webinar, I think it should be okay, but if you're having trouble, I would simply cut and paste the webinar link you have there at the bottom. If you look there, it's, yeah, I think it is the correct link. Ed is also having the same trouble with the link. Well, I think the best thing to do would be then to simply email or contact Pro Trader Strategies, okay? And they will give you the same thing. If the link isn't working or if you're having trouble with it, they will provide you with a new link. Simply contact them or email them, and what they'll do is they'll email you back the correct link, and then you can go to the sign-up page, or they can just take your order over the phone, okay? Either way, though, they will hold onto the proper discount. I see now that Jeff is saying the link is working. Okay, so now he did get it. Yeah, if you're having difficulty, just call them or email them, and once again, they will hold on to the discount if you said you had trouble getting the link. Trust me, though, this, if you are able to get on the link, I see some people are all still being able to get on the link now. It is working for them. It could be also that many times we have so many people trying to get in at the same time, it kind of busts the internet for a while. So because of such an extreme discount, so that could be it as well. But once it does start working, yeah, Ed is now saying that it is working perfectly now. Don't worry, we will hold that for you, but trust me, by this time next week, or probably by Monday of next week, it goes back up to a full $997. That's how powerful and how much information is in this. I have, we're just honestly telling you the truth here. We have people that have given us testimonials just by purchasing this $37 deal, saying for the first time they are consistent traders. They've been trading for years, and by using the simple techniques that I teach in this 3-hour video, they've finally gotten on that road to consistency. They've seen more winners than losing trades. So this is what we try to do. We're an educational company. We're not the type of company that says we have all the answers and you have to pay us a subscription every month because that's the only way you'll make money. we want to give you the information so that you can run with it and trade on your own. That's the way trading should be, in our opinion. A question from Amir. He says, this is the first time I listen to you. Personal feel you're telling good working system. Try, and thanks for a good webinar. Oh, thank you. Thank you very much, Amir. I think what separates us and what really stands out from other presenters is that people see our sincerity, and the only way they can see that is because we usually give you education for free in our presentations. Most people will tease you along, and then they'll say, in order to find out how to do it, you have to spend $2,000. And it really doesn't give a very good impression to the attendees. What we want to do is the opposite. We want to leave you with something, some tidbit of information, so that you'll be impressed and say, hey, this does really work. I'm going to come back and be a member of Specialist Trading and purchase some more information, because they're sincere in their ability to want me to elevate my trading. That's really what we do. So as you can see, even if you decide not to be a member of the $37 extremely low deal we have for you today, you still can go away today with information that hopefully will be able to get you consistent. All right, so we at least leave you with something that you can begin using as early as tomorrow. Now remember, go back what I said. Go back and look at your last 10 or 20 trades. Apply that simple 50 period simple moving average. Apply that simple technique. I can almost guarantee you that you would have had, more consistency if you would only been buying above and selling below. But for some reason, as traders, we're taught to do the opposite. We're taught to buy below and to sell above. But once again, in my 38 years, there is no consistency in that type of trading. It's much easier to be in sync with the overall market, and the best way I know how to be in sync with the overall market in my nearly 39 years of trading is to use that simple technique of the 50 period simple moving average. That's yours. You can start using that. That's one of the techniques I share with you today. You can start using as early as tomorrow, okay? So ask yourself in conclusion here, if your trading is not where you thought it would be this time a year ago, you have to take advantage of this $37 deal, only because it's so inexpensive. I'm sure many of you may have spent more than $37 today just simply trading on your commission costs alone. And trust me, you can't even go out to dinner with someone for less than $50 today. So $37 is a great deal. It's yours for life. This is not something that's only good for the next 2 weeks and it disintegrates. You can use it. It's a link. It's an online course. You can use this and follow it whenever you'd like, okay? Plus, on top of that, you'll get my personal email address. You can contact me whenever you'd like. So this is a great deal for $37. I don't think you can get better than that. And in conclusion here, remember, here is all the information you need. It looks like, as I'm seeing here, that everyone is being able to use the link. It probably was everyone was trying to get there at the same time and we're kind of clogged up. But now it's working perfectly okay. But if you did have a difficulty, just copy down the information here for Pro Trader Strategies. They'll hold on to that $37 deal for you if you just mentioned that you couldn't get the link working correctly, okay? I want to thank you so much for attending today. I hope I in some way gave you information that was able to elevate your trading, and I look forward to all of you becoming students of mine and members of Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.